This week, is the Fed Chairman Powell going to be Santa Claus, or is he going to be the Grinch that stole Christmas? We're going to talk about the FOMC meeting coming up this next week. And we're also going to talk a little bit about the flows that we're seeing in the market because it's really important as we head into year end. We're also going to discuss the strong dollar. I mean, it is so strong, especially against some of these commodity currencies. And when stocks are rallying like they are, it's a little bit of a warning sign. And the FOMC is not the only central bank in town. We have the Bank of Japan, Bank of England, Riksbank, Nordic Central Bank. So there's a lot to discuss on the Week Ahead video. My name is Blake Morrow with Forex Analytics, and you're listening to the Week Ahead video this week it'll be for December 15th, 2024. And I'm glad you're here. And like I said, we've got a lot to talk about. And really one of the big things that I wanted to discuss is about the Fed Chair Powell, because he has the FOMC. Well, we have the FOMC meeting next week. Just came off of CPI, which came in line with expectations, which seems to have opened the door for a 25 basis point cut into this, as we wrap up the year. But how far he leaves the door open for more rate cuts in 2025 is where it's going to get interesting. The market's looking for another full point cut, I think a quarter point cut, 4 times over the next year, roughly. So the expectations are going to be for less than that, or maybe even more than that. And I was just talking to Jim Welsh from Macro Tides a few moments ago, and he was like, Powell likes to leave his options open, as he probably should. So, is he going to be Santa Claus? You would think so. However, some of the economic data has been particularly sticky, like inflation. And as you guys have probably seen, the jobs market is still, I would say it's still fairly tight. So there's a lot of, it's a tough call. And I think that's what's going to set the pace for the last couple of weeks of the year is what Fed Chair Powell does and how he frames going into next year and the rate cut that we're probably going to get this next week. All right. One of the other things I wanted to discuss really quick before we start getting into the charts, I want to talk about end of year flows. This is the time of year where liquidity starts to dry up. We're in a pretty big community in the Forex Analytics community. And I'll just show you guys this real quick. If you go into Forex Analytics, and let me take myself off of here real quick. Just bear with me. Yeah, I'm gonna remove myself from the screen, and I'm gonna take you over to the Forex Analytics chat room. Now, to get in the chat room, when you're in Forex Analytics, all you have to do is hit this little button right here, and it'll launch this separate window. And we have a lot of different chat rooms. We have we have a trades room, Spanish chat room, S&P room, Flowonomics room, which is our macro chat room, news and research. If you guys want to know like what trades I'm taking, you can go, oh well, look, Blake is shorting some more dollar CAD, that type of thing. So there's a lot of different rooms that you can go into, but I want to show you this real quick because we have all these side conversations, side discussions. There's a lot of traders that are actually checking out for the end of the year, and when they do that, you realize that liquidity is really starting to dry up, and it's not. I mean, obviously these are individual traders. They're not. It's not some institution that's trading, but what that shows you is there are a lot of people that are leaving for the remainder of the year. And as there's less people trading, that means when flows have to be, pushed through the market, it tends to dominate the direction. And we're seeing that with very, very aggressive moves. If you look at the dollar intraday, I'm just going to show you this intraday chart of the dollar today. This is Friday. We had these massive moves back and forth, in European hours, and then sell-offs in European hours, rallies in North America, and they're very violent. And that's going to happen because all these flows are trying to get pushed through the market, and there's no one to take the other side of the trade. It's only going to get worse over the next couple of weeks. So the reason why I talk about this is because I think you need to be managing your risk a little bit more carefully. That means taking smaller positions, realizing that if you get in a bad trade, probably it's best to get out of the trade, take the loss, and hopefully reevaluate at some better price. Anyway, One of the other things I want to talk about is how strong the dollar has been. You can see how the dollars has strengthened all the way to the 618 retracement. I'll show you this. But where it's showing the majority of its strength is against the Aussie, the Kiwi, and the Canadian, and some of these commodity currencies. And when you see the dollar really outperforming against those currencies, that is a bit of a concern, especially when stocks have been as strong as they are. You tend to expect the dollar to do worse against those currencies. But right now, the dollar has been extremely strong against the Canadian, the Australian dollar, and the Kiwi dollar. And I think that's worth noting. And like I said, this week we have a lot of other central banks, not just the Fed that's meeting this week. So what we're going to do is we're going to go through all of the different things that are happening this next week. And so you could go through on Forex Analytics through your calendar. You can go ahead and select the days that you want to go through and follow along right here. It's next to your Live Squawk feed. You get the Live Squawk, real-time Live Squawk feed right here. But what we'll do is we'll go through some of the individual currencies right over here on Forex Analytics as we're going through the news that's happening this next week. So, one of the things, and actually we don't follow this on Forex Analytics, so I'm actually going to talk about this on, here, I'm going to grab our charts that we usually use for the week ahead video. I want to talk about the US dollar CNH, not because I'm trading the US dollar CNH, but we do have a lot of Chinese data coming out here over the course of the next, let's get this into a 4-hour chart. Here's the US dollar CNH, and one of the things is we have a lot of data coming out on Sunday night in China. We have industrial production, retail sales, unemployment rate. You have 1-year financing. They call it the MLF loan rate, and that's going to be a big deal because one of the things that we've seen over the course of the last couple of weeks out of China is they have not been able to move the needle in their markets. You take a look at the CNH 50 or CN 50, China 50. Here we go. Take a look at this market and just see how heavy it is, despite all the announcements that they've been trying to make stimulating their economy. And the market has been absolutely unresponsive the last couple of weeks. So when you're talking about loan rates this week, which there's a couple of different times that China is going to be announcing loan rates, they can tinker a little bit with that adjustment to try to stimulate their economy a little bit. So all that data is coming out on Sunday. So just keep that one in mind. All right, as we move along, if you go, and by the way, there is so much data being jam-packed into this week because it's really like the last week of the year to get most of the economic data out, just FYI. So it's going to be a busy week. All right, on Monday, we have a lot of PMIs. We have French PMIs, we have Eurozone PMIs, we have German PMIs, and we also have UK PMIs and then US PMIs. So we're going to see if that US exceptionalism story really sticks around. I want to talk a little bit about, and I'm going to just keep this chart right here with the euro. Matter of fact, let's flip over here really fast and talk about this euro and the move that we've seen. We talked about this inverted head and shoulder pattern over the course of the last couple of weeks. Well, obviously we couldn't get past the neckline on a sustained basis. So we don't want to look at it as an inverted head and shoulder pattern. Matter of fact, I still think that if we make it above 106.30 right there, it's going to be a very bullish event. But what's really interesting about the euro as a whole is you had an ECB meeting this week. And, the ECB, President Lagarde, she was dovish. Mixed, but dovish. I mean, and you talk about the ECB that's really setting the pace to continue to cut rates the first couple of meetings of 2025. They're dovish. And I mean, we've had French elections, French government collapse, German governments to do the same. We have really horrible economic data in the Eurozone. Yet, the euro is still not breaking down. And I'm sure, especially if you look at the CFTC data, speculative traders are taking the most short bets that they've had since the end of 2022. And we had this conversation. If you're in the Forex Analytics chat room, you go over here to where it says news and research. I was having this conversation with one of our traders, Adam, who we were discussing the CFTC data, and we're going to get updated data later on today. It's Friday, so we'll get this new data. This is the most selling we've seen since 2022, the end of 2022, which had been right here where my cursor is at. Okay. Now, if you look at what happened at the end of 2022, it's really interesting because at the end of 2022, oh no, I'm sorry. It was the end of. Let me confirm that. It was the end of 2023, the beginning of 2023, or end of 2022, beginning of 2023. So that would have been right here, end of 2022. You can see the market was extremely bearish. Speculative money was extremely bearish, the euro. And what happened after that? You got this really big reversal. Now, that's not a guarantee that that's going to happen again, but you got the speculative community really, really bearish the euro. And I'm going to point out again, it's not going down. It doesn't matter what you throw at the Eurozone right now. It is really holding up some very key technical levels at this point in time. So if you take that all into account, you have to be a little careful on Monday, because if the Eurozone PMIs come in better than expected and the US PMIs come in worse than expected, you could see a continued squeeze higher in the euro back towards 106, even ahead of the FOMC meeting on Wednesday. Is it on Wednesday or is it on Thursday? Let me double check that. It is on Wednesday. It's always on a Wednesday, but I just wanted to confirm. You know, sometimes these holiday weeks are a little wonky. All right, continuing on. We talked about what's happening on Monday. Between all the PMIs, we have US PMIs, Eurozone PMIs, UK PMIs. By the way, cable has come down quite aggressively over the course of the last couple of days, as we had UK GDP data just come in pretty weak. And with the Bank of England this next week, you have to be a little careful because we have jobs data from the UK. Like I said, we have the PMI, we have inflation data from the UK this next week. And so with all that coming out just ahead of the Bank of England, you have to be a little careful with sterling. It's not acting as well over the course of the last couple of days, especially following the UK GDP data that just happened last night, which actually pushed, that was Friday morning, which pushed sterling lower towards key levels of support. All right, moving right along on Tuesday, like I said, we have UK jobs data. Out of the Eurozone, we have German IFO business climate, and then we have also the ZEW economic sentiment. On Tuesday, we're also going to have the Canadian CPI. Now, I want to point out that the US dollar Canadian is so dang strong. We were targeting a move in the dollar CAD. Let me pull that up right here. We were targeting a move in the dollar CAD to right where we're at, to the 127% extension of this high to that low. Right there, that's the 2022 high to the 2023 low. There's the 127% extension right there. But also, if you look intraday, and let's take this high right here, back on November 25th to that low right there, you can see it's another 127% extension. So we had anticipated we were going to get up to these levels. But the fact of the matter is the dollar Canadian is not backing off. Now, we do have CPI on Tuesday, and that's going to be closely watched because the both trim and common CPI, which is basically core, and headline number CPI, median CPI in Canada, is expected to tick lower. But if it does not, we could end up seeing the Canadian dollar strengthen and the US dollar Canadian drop back below 142 and maybe even a little bit further ahead of the Fed. Now that's going to be on Tuesday. We will have that Canadian data. Also on Tuesday, we have the dollar MEX or Mexican retail sales. Now, interesting thing about the dollar MEX is if you follow this one closely like I do, we've been following this this ascending channel. You'll see it right. The one I want to look at is right here. There's a rising channel right there, and I don't think the data that we're going to get on for the retail sales is going to be the catalyst that drives the dollar Mexican peso lower, but I think it's worth noting that it's not performing well. And that's usually a result of the stock market doing so well. You tend to get Mexican peso strength, and that is pretty much what we've been seeing. We've been seeing a consistent Mexican peso strength, even despite all of the tariff warnings that President Trump and his administration are throwing at Mexico. So I find that really interesting, and I think that's going to be something you have to shelf in the back of your mind. In the weeks and months ahead, is how well the Mexican peso is acting right now. All right, going into Wednesday. On Wednesday, we have UK CPI, as we mentioned earlier. Then we're going to have the FOMC. All right, and the FOMC is going to be really critical this week, and I'm going to spend a little bit of time talking about the dollar index and talking about what we're getting from the Fed. All right. As I mentioned a little bit earlier, the Fed chair really has the opportunity to be Santa Claus or the Grinch that stole Christmas. And that's not an exaggeration because the market is broadly expecting the Fed to cut rates by 25 basis points. How they frame going into 2025, and if Jay Powell says, I want to keep my options open, and the interest rate pricing doesn't change between, before the Fed and then after the Fed, where the market's expecting 3, maybe 4 rate cuts into 2025. If that is truly the case, then the equity markets might give that as a green light, like they did this week with CPI. CPI came in line. If the Fed doesn't rock the boat, well, then we might see stocks rally into year end and get that Santa Claus rally. But if the Fed chair seems a little bit more reserved and is a little bit more, how should I say, hawkish on data and says that inflation's ticking higher, and he starts talking about how strong the labor market is, and says something like he said just recently during an event that he is surprised how strong the U.S. economy is. He starts making comments like that, and the market starts thinking that the Fed is not going to cut, 4 times in 2025, and they start to price out 1 or maybe 2 of those rate cuts. That could actually put it could really dampen the stock market going into year end. Now, when you're talking about the dollar, that means that if the Fed chair is more hawkish, the dollar breaks out to the upside, the Fed is more dovish, then we're probably going to see that high really hold. Now, I'm in the camp as of right now that the US dollar made a false breakout above this really key level of resistance. You can see this is a multi-year range. You're talking from basically November of 2022 to present day. We had this huge range. You guys can see it, right? I don't have to be, let me get myself off of here. That's a big range. And what we did is we poked our head above that range. Now, when you get a false breakout, it usually leads to a breakdown. That's typically what will happen when you have false breakouts. It doesn't mean all the time, but that's the way I tend to lean. And so what you'll notice is today we are probing the 618 retracement of this move here. So if the dollar index breaks through support, that means that we're probably going to challenge this 105.50, which is a very, very critical level on Forex Analytics. Matter of fact, if you look at the dollar index here, it says the bull bear line, which means you're bullish above that level, you're bearish below that level. That comes in at 105.42. So if we break through this 105.42, it becomes really quite bearish for the dollar index moving forward. Obviously, while we're up here, the risk is that it continues to test these highs once again. And that's going to have everything to do with the Fed Chair Powell, the Fed Chair Powell and the FOMC on Wednesday. All right. Now, also on Wednesday, I forgot to mention this. I did mention the BOJ's meeting this week. We have the BOJ meeting this week. Now, I think the dollar yen is probably one of the more interesting currencies out there. And let me go into that. I'm going to just delete all that stuff. Here's the dollar yen. The dollar yen, back here, we were obviously looking for a rally and it to fail, and it did end up failing, but we never got that rally. But what you're going to see here, and let's delete this, and what you're going to notice, if you take this high to this low, we're at the 618 retracement today, right now, at that level right now. Okay, why is that important? Today, when Kyoto News Agency, I think it's Kyoto, if I'm make sure I have that right. Correct me down in the comments below if I got that wrong. They basically put out a headline that the BOJ is expected to, or they might actually decide to keep rates unchanged. Now, the market's been sniffing this out all week long, and you can see how the U.S. dollar, Japanese yen has rallied as a result. Whoops, wrong thing. It rallied as a result all week, right? It's just been pushing higher. Now, it's not only a function of dollar yen, it's also a function of yields, which we'll go into in a little bit, because yields have been rallying. But everybody's been saying, I don't think the BOJ is going to hike by 25 basis points. Then, maybe they're not even going to hike by 10. And then we get this story today, and what happens right after that story? The U.S. dollar, Japanese yen actually sold off a little bit. Now, we hit brand new highs because yields are moving higher, but the bottom line is, what happens if the BOJ actually delivers a hike? It doesn't have to be 25 basis points. It could be 10 measly basis points. You might say, well, it's not going to do a whole lot. No, it won't. But it's the idea that the market said, oh, shoot, maybe we're not even going to get a rate hike. And they do deliver a rate hike. That means their pace is still to deliver rate hikes. The dollar yen is going to weaken the dollar yen will weaken significantly, especially if the Fed chair is dovish earlier that day. So there's a double whammy brewing here with the dollar yen. So if you trade the dollar yen, keep that one in mind. One of the other things that is happening this next week is we have New Zealand GDP just before the BOJ, and the New Zealand currency, as I've mentioned to you guys, is so weak, and you can see this bludgeoning of the Kiwi dollar over the course of the last couple of weeks. We've got this descending channel that's just I want to say it's just has zero mercy at this point. And the dollar, US dollar, the New Zealand US dollar just continues to just get pulverized here. So when you're looking at this descending channel, that means we really are going to have to break out of this descending channel to turn bullish in any way, shape, or form. You can see that channel. We've had it on our charts here on the week ahead video for quite some time. At this point, you have to just even start making higher highs and higher lows versus lower highs and lower lows, which is exactly what we're doing. At the very end of the week this week, you can see we're at fresh new lows as of right now. Like I said, these commodity currencies have been extremely weak against the US dollar, and I sit here probably like you guys and gals and scratch my head a little bit too, wondering why such a big deal. Also, one of the other things I forgot to mention on Thursday, well, as we get into Thursday, because Thursday morning is the BOJ. Thursday, we're going to have the Riksbank, which is the US dollar Swedish krona. And by the way, I'm not really excited about this at all, but we have the Norges central bank, which I'm actually very excited about, because what you guys are going to notice here, and let me do this with you. We obviously haven't looked at this in a while, but look at how big, and I'm going to delete that. I'm going to delete this, and I'm going to take this green line, and I'm just actually going to make it at 1120. You will see, and let me move this one. You will see that we have hit 1120 on the US dollar Norwegian krona 1, 2, 3, 4, 5, 6 different times over the course of the last few weeks. I mean, that is a big time resistance. And frankly, while you're above this rising trend line that is right here, the risk is for an upside break. That is where the risk lies. And it could be as early as this next week if, Norway and the Norges Central Bank is very dovish or suggests that there's more rate cuts coming. We could see the US dollar Norwegian krona really, really take off. So keep your eye on the US dollar Norwegian krona this week. And also on Thursday, we have the Bank of England. And like I said, sterling, we had this nice little inverted head and shoulder pattern. I was playing fine. And then, we slumped. Now, here's the thing about cable is, and you guys probably have seen this, we have a lot of support down here. Matter of fact, I'm going to zoom out a little bit further. And I'm going to take this trend line here, and I'm going to match it up with this low and these lows and do this. Okay. So right now, let's zoom back in really quick. And you'll see from here, let's delete that. Let's delete this channel. And let's just talk about how important this support is somewhere down here, which comes in at roughly 125.27. There's a lot of support down there. We could revisit it following the Bank of England, especially if the Bank of England, remember, this is the data that we're getting is with the new Labour government. So if the data continues to be weak this upcoming week, CPI data, remember, it's not just the Bank of England. We got CPI, we got PMIs, we have jobs data that's coming out this week ahead of the Bank of England decision. If that data remains weak, you could actually have a little bit of more dovish Bank of England, and next thing you know, sterling could be testing, if not breaking, this rising trend line that comes in right around the 125.20 level. So keep this level in mind, because I think this is going to be a make it or break it week for the US dollar and, currencies like, pound dollar as well. All right, trying to wrap things up. I know it's a busy week this next week. We have US final GDP, and then on Friday, we have, and then we also have US retail sales at some point. I believe that comes in Monday or Tuesday. I have to go back and look. But we have UK retail sales, Canadian retail sales. On Friday, we have core PCE, which is the Fed's most favorite inflation gauge, but we're going to be past the Bank of England or the FOMC. So I don't know how relevant that's going to be as we go into January. Okay, with all that being said, that was a mouthful. There's other charts that I want to show you. But before I do that, I want to mention just something to you. If you come to our website on Monday or Tuesday of this next week, we are going to initiate our end of year sales for Forex Analytics, and you will get the best prices, better than you've ever seen in the 8 years of our existence for one of the packages. And I'm not going to tell you exactly which one, but that happens on Sunday or Monday, depends when our developers can flip over everything. So here's a suggestion to you. If you want to try out Forex Analytics and you're watching us right now, before that we flipped everything over, you'll notice right here on the site, right there on the site, it says sign up today. It's only $1 for 10 days. That trial goes away when our sale prices go on. So if you want to try out Forex Analytics, here's a little tip. Try it out now. So take your trial. It's $1 for 10 days. If you like what you see, you like being in the chat rooms, you like the platform, everything else we've talked about, then you can take the offer at the very end of the year. And we're going to keep that. We're going to keep those prices up throughout the holiday season. Now, also, if you are interested in the trader funding program, we will have a significant New Year's and holiday special for you, which is 30% off starting the 15th or the 16th, Sunday or Monday. You'll have 30% off all assessments for the trader funding program. And also, I just want to mention we have some really exciting news for the beginning of next year regarding the trader funding program. Whether you can take an assessment or maybe you can bypass an assessment and still be involved with Forex Analytics. I'm not going to get into the details now, but thanks for listening in. You just got something that you might really enjoy this next year. All right. At this point in time, before I get into gold, copper, crude, bonds, I'm going to bring in Nick from Trading Analytix. He has a few different charts he wants to show you. He wants to show you the big three. He's going to take you through XRP, and I think he had one other stock that he wanted to cover, so he's going to do that right now. So enjoy your time with Nick from Trading Analytix.
Hello everybody, Blake, thanks so much for having me on. This is Nick with Trading Analytix. Let's go ahead and talk a little bit about equities. So a little bit of a frustrating week. If you tried to buy this dip here on Tuesday, or if you tried to sell the rip, last Friday, or even after the CPI. But you can see that we're pretty well wedged in between some solid options. You see the puts are at 60.30, calls at 60.75. So, it looks like we're setting up a little bit of a range here. Overall, I would say that this S&P is pretty bullish. Yes, we've come down a bit, and yes, we rejected, but we're not pulling back all that much. You can see here that, on this extension here, we haven't even come down to the 38.2, which I do think will be the next level of support. And I've also seen quite a large amount of options sitting at that level. So 6,000 is really going to be our key support moving forward. And you can see that we have some trendline support here as well. But I do expect that we could perform pretty well in December. You can see here, when we're up 20% year to date, you tend to see people chase into year end. In the last 10 instances, we've seen a 90% win rate on that, with the average being a 2.4% move higher in December. And if you stretch that back to 1950, it's still positive 74% of the time, often up 1.5% over that run. So that's kind of what I'm thinking. And looking at the Dow too, yes, it's come off a bit, pulled back 2.8%, still a healthy move, and we're right at the 38.2. So this should be support here at the moment. This is at 43.885, but if we break down lower, somewhere in between this trendline support and the 50% retracement, I think we should find support there in the event we fall a little bit further. I will say, though, I am concerned about the NASDAQ, only because we're coming up with some pretty key resistance. You can see here on this extension, we're right up near the 161% extension and some trendline resistance. This dates back to August, so that's pretty significant. And if you go into an even larger time frame here on this extension, we're right near the 161% extension. That comes in at, call it 22K. So it's going to be fighting a good amount of resistance up here. Whether or not it can blow past it, I'm not sure, but we'll have to see. And another thing too, if you just take a look at the big tech, Mag 7, we've come up to the 161% extension in this Mag 7 composite chart. So we've really come a long way, and you've seen moves like Tesla become so explosive, it's blowing past everything. Apple as well has been strong. But let's take a look at Apple really quick. You can see here we're at the 127% extension. I've had a resistance zone up here for a little bit of time after we broke out of this formation, and I wouldn't be surprised if we pulled back a little bit here. What I'd be looking for is a move back near 236 to try and give us a little bit of a back test, and then potentially we can resume trend. Another thing that I'm looking at too is crypto. Crypto has not really pulled back like some of the equities over the last few days. We had a false breakout originally, but Bitcoin's starting to look pretty good again. And one thing that I do like to keep my eye out on is XRP. You can see we pulled back to the 38.2. That's the continuation fib. Now we're nestled up against this trendline resistance. That comes in at 2.48. So I think if we can get past 2.5, we're likely to squeeze a little bit. And I do like that setup. And you guys know I've really liked Litecoin as well. I had a buy zone here at 102. If you're looking for updates on big tech, on crypto, I'm posting videos throughout the week. You can see this one here. We talked about Litecoin while I was sitting at 106. And some other cryptos as well, updating you guys on XRP2 here. So we're trying to give some ample trading opportunities for you guys. Take a look at us on Trading Analytix, and I'll pass it on back to Blake. Hope you all have a great weekend, and thanks so much.
All right, Nick, thank you very much for joining us and giving us your thoughts and views, ahead of this next very, very volatile week that we're looking for. All right, let's get back into the charts. And I want to cover just a couple of things that Nick didn't cover. Well, first of all, I'm going to talk a little bit about gold, because gold, really interesting, despite the dollar strength that we've seen, gold has been, I think it's holding up relatively well. Let me find gold. Oh, here it is. Holding up very well. What we had this week is we had a nice little double top form, but that was after a range extension. Basically, we went from, you can see these levels right here. We went from this level support at the 618 through that resistance, extended the range, completed it, little double top. Now we're coming off again. And gold is trading, it's trading relatively heavy at this point. But keep in mind, gold's in a nice ascending channel. Big support's going to be at 2605. Make sure you keep that one on the radar in the days and the weeks ahead. We talked about copper being on really big support a couple of weeks ago, and it still is. I mean, you can see copper is really tightening. One thing about copper is, it's not acting great as stocks are going higher. And, copper's used for a lot of different things, industrialized, but maybe, one of the things about China slowing down and the market has not picked up on, China picking up, and obviously you can see it in the Aussie dollar. Maybe that takes copper back down towards support as well. One of the other things I want to mention is I want to talk a little bit about crude oil, because crude has been in this range. We thought we were going to break out of a triangle, but nah, it's just still in a dang range. And the range top comes in right here. With everything that's happening in Syria, you could see an extended move in crude oil. You could start to see crude oil really start to strengthen, but we'd have to get above $73 to break out of this range. And then obviously a break below 66.60 would be bearish. Last thing I want to talk about before I mention the S&P and the Nasdaq is I want to talk about 10-year yields. We've seen a really big move up in 10-year yields, and it's pressing higher. I mean, look how strong the 10-year is. We actually just filled the gap just now, actually, as I think I'm speaking. We actually just filled the gap from back over here on Sunday, November 24th. So with that being said, we're coming really damn close, really close to filling that gap. Once that gap gets filled, then you're going to have to be a little bit more careful with playing the bond market on the bearish side, selling 10 years, selling the 30-year, because right now yields are getting to levels that you might start to see a reversal soon. So just keep that one in mind. I did want to talk about the S&P really fast and the NZDUSD100. The S&P is basically challenging support. Now, why is this support? Because this is the breakout point. You can see it right here. It's at 60.30. All right. We've this week, all we've had is a bullish consolidation of the recent run up in the S&P. Yes, we might still be in an ascending wedge, but that doesn't mean that we can't rally a little further while we're in that wedge. Again, this has more to do with Fed Chair Powell and the FOMC than anything going into this next week. But take a look at the NZDUSD100. This is in. I want to actually just show you something really quick. This is a weekly chart of the NZDUSD100. Take a look at this really fast. I want to do an extended line that looks like this. There you go. Right. And then I'm going to grab this and duplicate it and do basically that. All right. We are really threatening a massive upside breakout in the NZDUSD100. And I think it's worth noting that it is so strong, because if the NZDUSD100 really breaks out to the upside, we could see, just kind of a melt up in the markets as we go into year end. Remember, there's a lot of optimism about the incoming Trump administration, and people want to own stocks. And if you get that green light from the Fed at the end of the week, then, we might see a melt up in the NZDUSD100 and other indices too as we go into the end of the year. So just watch that NZDUSD100. We are really at risk of just taking off to the upside. All right, this is the point in time that I discuss the top three or the three trade setups from last week, and I will give you three trade setups for this week. Last week, I'm just going to go into them really quick. I said buy the New Zealand dollar above channel resistance, and that's a breakout. We talked about that. It didn't happen. We talked about NZDUSD100, or excuse me, the Kiwi. We never broke above that channel resistance. We never made our way up here. So it never happened. Okay, so first trade setup didn't happen. Second trade up, short dollar Mexican peso below 1980, which would be channel support, which would be right here. Guess what? That never happened. So trade number two never happened. Trade number three, buy the euro dollar on daily close above 106. Well, we never had a daily close above 106, so that never happened. So I gave you three trade setups. Actually, I think this is the first time that's happened since we've been doing this, that all three trade setups never even took place. It's not like they worked or didn't work. They just never, they were setups and they never came to fruition. So that stinks. That's the first time. That's the first time since I've been doing this with you guys. All right. Well then, let's not make it 2 weeks in a row. What are my top three trade setups going into next week? So this week, I still like these channels, but I'm more focused on the Aussie dollar now. So if you take a look at the Aussie and you do this, there's channel resistance. And here, well, you can do it this way. You can do it a couple of different ways. Actually, this is the 4-hour chart, so I'm going to zoom in a little bit, and let's grab this and do this. So there's channel support, right? So a break above channel resistance would be bullish, because that means we'd be breaking that resistance, and that would mean we're making a higher high and higher low because we had decent Aussie jobs numbers this week. So a breakout above channel resistance in the Aussie dollar, I'm looking to get long. And hopefully that's with a Santa Claus gift-carrying Fed Chairman Powell. Trade setup number two, the euro dollar above 105.30, which is this resistance right here. Whoops. Should produce a move back towards 106. So can you still buy the euro on a daily close above 106? Sure. But I'm actually looking for a break above 105.30 for a move back up towards 106 to 106.30. So that's trade setup number two. Trade setup number three, before I give it to you, if you guys appreciate these videos and you think they're beneficial and they help you getting set up for your next week, getting you prepared, the data that's coming out, what to be looking out for, please give us a thumbs up. Please subscribe to the channel. And if there's something that I missed, which this week I probably missed something, please jump down in the comments below and let me know what I missed. But if you like these videos, please give us a thumbs up. And that's really for our team that does this over the weekend. I'm filming on a Friday. They're going to get it through editing and out on social media so you can see it over the weekend. So, give them a thumbs up. Or you can give me a thumbs up and comment down below and tell me how much you love it. I'd love to hear that. All right, so thank you for that. All right, trade setup number three. You guys, I talked about it last week. Buy Bitcoin below 100,000, sell it above 100,000. We've been talking about that and the big channel that has developed in Bitcoin. And that is something that I think you could potentially trade this week, because if Bitcoin does get a sell-off to 95,000 right here, 95,500, you could use that as a buying opportunity as long as it stays above 95,000, which is somewhere right around here. Then I think you keep buying dips and you sell it back above 100,000. And those are my 3 trade setups for the week. So I want to wish you all a wonderful weekend. Thank you so much for spending your time with me. I know these are long videos, and hopefully you are enjoying every moment of them. And I hope you're enjoying your family through this holiday season. And for those of you that are already off for the remainder of the year, thanks for tuning in, and hope you have a safe and wonderful holiday season. For the rest of you guys, I'll see you on Monday on the Face Show, first thing Monday morning, and I'll see you all next week, and I'll even see you for next week's week ahead video. Anyway, have a great remainder of your weekend. I'll talk to you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.